Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn how to trade the futures markets using the Viper tools, you are absolutamente in the right place. Tonight's topic is everybody's favorite, quickly spotting ranges and seeing how to trade them. Everybody loves a good range. Oh, I'm just kidding. Everybody hates ranges. Let's be honest, everybody hates ranges. So here's what we're gonna do. We're gonna face the ugly beast. We're gonna face the beast and look it right in the eye, and everybody's gonna come away with a renewed vision of how to take down those ranges. Okay? All right, so without further ado, let's go ahead and knock out our disclaimer and get right over to some charts. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Most excellent. All right, let's get over to screen one. Now, the king of ranges is, stand by. Let me tee this up for you here. By far, without question, the king, undisputed heavyweight range champion of the world. Okay, I'm going to give you a guess. Out of all the instruments, futures instruments in the entire world, what is the #1 range-bound prone instrument that you can pretty much every day count on some kind of range-bound activity? It's the big mama in the room. Give you a guess. What's the big mama? Come to Pappy. All right, can everybody see here? Am I on screen one? ES, that's right. Oh, the ES, the E-mini S&P. Excuse me. Let me take a quick sip of tea and we'll kick this up. Now, here's the thing. If you're going to trade ES, you have got to become, and I'm not going to mince words about this, you're going to have to become a range-bound trading expert because it spends a lot of time in ranges. Here, let's look at a couple areas. Let's look at this area right here. And I mean, clearly you can see there's some resistance up in this area right here. Everybody sees that. We will. What I'd like to do is we're going to talk at a very high level about ranges, and then we're going to drill down and get into the nitty-gritty of it. Okay. But right now, I think what we're going to do in this beginning part is just work together to see them and understand what they are, and how you can quickly know you're in a range and then know what to do about it, because that's the whole key. It is, a lot of times most people don't figure out you're in a range until much later, you know, and a lot of trades have come and gone and you missed them and whatever. So, and then I would say support is more or less down in this area right here. Now, how long was ES in this range? Well, let's give some perspective to this. Here is midnight last night here in California. I'm in Pacific time, right? This was yesterday morning over here. So it stayed in this range arguably from you know, back here at 9:30 yesterday morning all the way over until 7 o'clock this morning, almost 24 hours in this range. That's pretty range bound, huh? Let's look at some other ranges. Let's just stick with this one. Now, here's what I'm going to do. How many points, what is the minimum amount of swing areas for you to know that you are in a range? What's the bare minimum? What do you have to see swing level wise to know you're in a range? How many points of swings do you need to know you're in a range? In fact, here's what I'm going to do. Here's what I'm going to do. Here's what I'm going to do. I'm going to clean this off, and we'll get a fresh chart, and we'll go back to 9:30 yesterday, and I'll show you how quickly you can figure out you're in a range. Okay. Let me get these. Let me get this off of here. Go with the clean chart. 2 is the correct answer. 2 is the absolute minimum. You need at least 2 swings to know you're in a range, preferably 3. If you can get 3, great. If you only got 2, that's a good start. So the first part of this session, we're going to talk about how we know we're in a range. All right. Now, here's yesterday morning about 9 o'clock. So here's the fundamental principles we have to understand when we're identifying a range. And it's really important. You know, I would suggest everybody, even if you're a bona fide range hater, and I understand that. There's a lot of you out there who just despise ranges and you just feel like you can't trade them and you hate them. I understand that, okay? But if you can add a little bit of range trading to your repertoire and do it profitably, you're going to really increase your ability to make money in these markets, because there's a lot of times where they get range bound and you just can't sit there like a deer in headlights like, what the heck am I going to do with this thing? All right, so we know that. Let's talk about what a range is not. So a trend is identified as higher highs, right? And lower lows, right? And so therefore, by definition, a range would be the opposite of that, which is sideways. So what would be our tools to know we're going sideways? What would be our primary tool to know we're going sideways? Out of all these tools, here's all your tools over here, right? There's a line, ray, etc., boxes, all manner of things over here. You know, triangles, put a triangle up there. What is the main tool to tell you to quickly identify that you are now in a range? Yeah, your horizontal lines. This is the little guy right here. This little guy right here. Now, notice over here around 9 o'clock, what's happening is that it looks like you're going to want to go into an uptrend from this swing right here. You had a little sell-off early. You know, you broke down, you know, came down, tried to double check, came back up, broke this swing, background turns green. Now let's look at some swings. There's a swing right there. So the first thing you want to do, can you see the swing that formed right there, 91.50? This is how simple it is and how quick. You just take a line tool, bang, right there like that. That's it. As soon as you see a swing, you put a line there. Now, let's blow this up real good. You come down near the mid-band, and then notice it bounces down here. So between, you could make the case around 9:30 and 10 o'clock-ish, in this half an hour, could you not put another line down here, like that? So that's how quickly you can do that, right? You have a line here at resistance, and you have a line here at support. And so here's how the saying goes. The saying goes like this. As long as it remains within the confines of these lines, you are said to be range bound, right? As long as it remains within the confines of the lines, you are said to be range bound. Now, is this range tradable? Well, for some of you that are new, let's check it out. 85 and a quarter, or you could say 86-ish, just use some round numbers. And resistance up here somewhere around 91. So that's 5 and change, maybe 5, 5 and a quarter, 5.5 times 4 is like 22 ticks. So I'm just going to restate the obvious that most of you already know. Minimum acceptable range for trading is minimum 20 to 25 ticks. So In the case of ES, is this range tradable, yes or no? From here around this 86 support level, just above midband, and resistance just above 91 up here. You're right around 20, 22 ticks. Yes. Yes, it is tradable. This is tradable. Right? This is kind of right at the lowest end of acceptability. So within a few minutes of time, we have identified, first of all, what the range is, where support and resistance are located very quickly. We have quickly measured it, just a quick, simple back-of-the-envelope calculation. You don't have to break out your IBM computer and run a bunch of algorithms. You just take 5 times 4, 20, 22. Yeah, I could trade that and make money. Yeah, it's right on the lowest end of acceptability, right on the cusp of the lowest end. Now, let's advance the chart, and then I'm going to ask a couple more questions in regards to the range. Okay, resistance is holding. Came down, coming down. Now, I'm going to pause it right there. This is 12:45, so it spent the better part of 10 o'clock to almost the close. You're looking at almost 3 hours of sideways here. 3 hours of sideways. There's the close of the market right there yesterday. There's the close of the market right here. Right here. Now, in here, in this area right here, what have you noticed happened? What's different about this area over here and this area right here? Has something changed? Okay, when you first drew the lines, if you recall, the market looked like this. And then going into the latter part of the morning, into the close, the market looked like this. What changed? Does this look the same as this? Well, the midband's gone flat. That's true. Yes, it'll do that. If I put predictors up here, they would all be lined up next to each other. Right? That's all the clues you need. Flat midband. Usually a lot of yellow bars, right, when you're going sideways. Predictors all sort of right next to each other, not going up or down, pretty much, sideways. This is all hallmarks. That's right. The range has gotten tighter. Notice how when it comes down near the midband here, it bounces back up to resistance. It doesn't get all the way down here anymore to 86, except for this little bit right before the close right here. You get a little bit down right here like that. Breaks it by just a couple of ticks, and then bingo, back up. Well, now you could make the case that the range is now between, say, 11 o'clock and almost the close for 2 hours, 87.50 support and resistance at 91, say 91.50. 4 times 4 is 16. Now, is this range tradable? 16 ticks. Well, by our definition, this is our rule. Our rule is 20 to 25, and you're about 15, 16 here. Technically speaking, no. Because let's see what you would have to do to get into and out of this trade. Well, you have to fade the top by usually at least 4 or 5 ticks. So your upper acceptability of trade entry and exit would be here. And you got to fade the bottom by at least 4 or 5 ticks to get in. Fading means you come inside. Everybody knows that, right? When you say the term fade. Fade that area. Fade means that you don't, your trade, whether you're getting in or out, is not right here on these dots. Obviously, everybody knows that, right? You got to come within whatever that level is. Usually in a range, it's 4, 5, 6 ticks. It's something in that neighborhood. So here, for instance, resistance at 91. Then 3/4, 91.50, and your trades would actually execute at 90.50. So there you have it. That's right at like 5 ticks. Likewise, down here, you're going to have to come inside of this to get in and out, probably somewhere in here. Right? So the trade you're left with is the meat of the trade is actually here, like this, from here to here. from here to here, et cetera, all the way down. Okay, maybe get an extra little tick in there. If you're good, if you're really good at what you do, that's the. So let's see what the meat of the trade comes up to: 88.50 to 90 3/4. 2 times 4, 8 plus. That's like 9, 8 or 9, 10 ticks in the middle. If you're tighter, it'd be less. Plus, working a little bit of slippage and commission. Are you really making any money in here? Are these trades making any money? Well, if you get in and out at the right spots and you put a couple lot on and you make your 9 ticks. Yeah, 9 ticks would be one lot. What is the value per tick of ES? Anybody know? What's the value per tick of ES? $12.50. Good. So 4 times $12.50. So each 1 point over here equals $50. $12.50 a tick. So at 8 ticks, each contract makes $100 less commission. At 9 ticks, you're at $112.50. At 10 ticks, you're at $1.25, right? 10 ticks, $1.25. So 2 lot on that, $1.25, $2.50 less commission. ES is one of those strange animals where you can bend this rule a little bit. Maybe, in fact, let's put a little footnote in here. Maybe I would say ES you could probably go down to as low as 15 ticks. And the reason that I can make that exception on ES is because of one main reason. And it is the fact that it's one of the very rare instruments where when it's in ranges, it's pretty clean in how it respects the support and resistance levels. See how these are pretty, with the exception of this little bip up and that little bip down. When it gets into a range, it really respects it. So it allows you to buy in and out here and get in and out pretty quickly. Now, last question, and we're going to come off of this. Your primary mode of entry to trade this range, is it L for long? You're buying support, primary mode of entry, taking profit at the top of the range. Is it S, short? Your primary mode is to short the top and cover at the bottom of the range. Or B for both. You trade short, you cover, you buy, you get long, you take profits, you flip it short. That's B. B would be your answer if you trade both sides of the range. L for long only, long. S for short only, B for both. I'll give you 5 seconds. How are you trading this range? What's the primary mode of entry? Long, short, or both sides? Give you 4 more seconds. Go ahead and type in an answer. If you were going to trade this range, you look at ES tomorrow morning and it looks just like this, and you say, you know what? That range-bound webinar last night was super duper cool. I feel pretty good. I'm going to start trading ES and SIM in the ranges and try to start making some money off of this. What would you do? All right, we got primarily long-only answers with a couple of sprinkles of both from Ron and Dan. So here's kind of the rule of thumb. And when I say rule of thumb, I'm saying this is how, I look at it, and most traders look at a situation like this. Is you want, if the how would you say, overarching direction of the market is sideways to up. In other words, the background is green because you've just had a thrust up like this. So technically speaking, it's sideways to up. Then your primary mode of entry is going to be longs from support. That's kind of the safest entry. Longs from support, longs from support. Now, in a well-defined range like this one, where it's going up and down and bouncing back and forth, and it's pretty clean and well-defined, you could actually do both. But I would not take shorts only. That wasn't the correct answer. Everybody sees that. You wouldn't just be shorting up here because the risk is it blows the top off and you get a huge stop out. Okay, good. Everybody understand what to do with this range? if you see it tomorrow. You know, what I would do is just practice. The first step of the practice is putting the lines in where you see support and resistance, and you know the rule. As long as it's in the confines of the lines, it's said to be range bound, right? You quickly do a measurement. Can I make any money on this thing? And then put buy orders in if you're buying it, right? Fade wherever support is, and then if you're gonna take short or reverse it or whatever, you put sell orders up here. Sell orders up here, buy orders down here. That's basically, in a nutshell, how you're gonna trade the range, right? Now I'm gonna advance this chart. And at some point today, it came out of the range and started to do something. And I want you to tell me when you think it's come out of the range and when you think the trend has changed. And you would type in a U for up and a D for down. Are you ready? All right, I'm going to start at midnight last night. I'm going to slowly advance the ES chart, and you tell me when it's come out of the range and whether it's up or down. Here we go. Here we go. I'm going to start midnight from last night on ES. Here we go. Ready? Okay, I'm going to work through the European session. There is 1:30. There's 2:30, still in the European session. 4:30. 6 o'clock. 6:30, equity market open. 6:37. 6:45. 7:02. Okay, I'm going to make a slight adjustment to this line for the morning session. 7:09. Let me blow it up now a little bigger so you can see the whole view of the morning session here. 7:14. 7:28, coming up on 7:30. All right, I'm going to stop it right there. Now, I have to address a couple of things real quick here. Okay, this is really important that we address this so we're all on the same page here. When it comes to ranges and support and resistance, and I know I've said this 1,000 times before, but it bears repeating because it's extremely important. You have to realize that support and resistance are areas. Okay, think of them like zones, like a how what's a good analogy? Like a, you know, something that's not particularly fixed in its location, but it's a general area of resistance and general area of support. So I'm going to draw the box, a box like that. So help me with a question here. I think the original line was here, so that might have been a little deceiving. So when a market comes up through a resistance level, you know, a couple of 5, 6 ticks with some bars like this, is this a trend change? Yes or no? All right. What about when a market comes down with a couple 3 bars and breaks support by, you know, a couple of 3, 4 ticks? Is that a trend change? Yes or no? Here over here. Here it's wicking up through a couple bars, breaking it a little bit. Are these trend change, these circles? Or is it changing trend here? Huh? Because the reason I'm asking is because as I was advancing this chart in the morning sessions, there was a few of you who typed in a U for up, believing that the trend had changed from sideways to up when these little areas were forming. So that's why I'm going over this. No. Now let's go back over here. Let's go back over here and look at some other examples where this happens. This is probably one of the trickiest parts of understanding ranges because we all want it to be perfectly clean. We want all these support lines that we type in to be just perfect little things, and the markets don't work that way. They're sloppy, messy. They're going to go a little bit further, okay? They're going to go down a little bit more than they should. right? Is this a trend change? Is any of the circles on this chart a trend change? Yes or no? Is that a trend change? How about this one? Is that a trend change? How about over here? This one? Well, you've got a lot of bars. Look at all these red bars down here, Charles. Is that a trend change? No. Here again, the area of support and resistance is just this. We put a line because it's the simplest, quickest thing for us to have a visual on where it's located. But the market's going to go a little bit above it and a little bit below it. That's just how it works. Okay? But these are absolutely not trend changes. Here, I'm going to throw a curveball at you. How about right here? What about this big messy area right here? Is this a trend change? What about that? Ooh, scary. Scary. That's a trend change for sure. Man, look at all those red bars. Broke support, went all the way down here. Look at that, Charles. That's a downtrend, man. What are you waiting for? Short that thing. What does it matter with you? Here, let me advance a little more while you're looking at that. Is this a trend change? Everybody see this? This big circle, is that a trend change? You've got to know this. If you're going to trade trends and you're going to trade ranges, you've got to know this like the back of your hand. This is critically important. In order for this to be a trend change, what had to happen? What had to happen here? What would have to happen for this to be a bona fide trend change right here? These red bars and these yellow guys, and obviously it went back up to check the top of the range. We all see that. That's what really happened. Yeah, it would have to kiss and roll and break that support level, right? You'd have to get. What was our definition? What was our definition? We just talked about a definition 20 minutes ago. What is a definition? Okay, here is it now. You got a low, right? Okay, came up and kissed here, right? So this low is lower than that one. This high is lower than that one. But where you run into a problem is right here. Is that low lower than this low? These two boxes. Is this low lower than that low? Yes or no? No. Well, what do we say a trend was? Didn't you say that a downtrend is lower highs and lower lows? Does this meet the definition of a downtrend right here? No. No. If now, on the other hand, if it went like that and then came up and started to, work its way down like a normal downtrend would be, that would be a yes. That would be pository. This is negatory. The fact that this came down, now, could you have been faked into a short? Possibly. Of course, this is like 20 minutes after midnight, and if you're a late bird trading the European session, maybe you were up, maybe you weren't. Probably not. But could you have boxed this in thinking short? Sure. After this big dip and it broke support, come back up and kiss, you might think, man, this might be changing trends. Maybe I'll jump on a little bit of short here. You box it in, you get filled short. Maybe you get a scalp, maybe you don't. And it comes right back in your face. Now, when it does that, what do? Trades that don't immediately go in your favor and start to dawdle around, come back up, challenge your entry, and then start breaking the other direction, and you got a big old fat 12-tick stop sitting way up here somewhere, what do? We've talked about this many, many times. Here's your initial stop sitting way up here. Do you let it just market as come get it? Go ahead, go get it. Go get that stop. Go, little puppy. Run like the wind. This is another really important thing. If you're going to commit anything to memory from tonight, this is like super important. If a market doesn't start going in your direction fairly quickly and revealing itself that it's going to go, hit scalp targets and move your stops down and follow through and all that sort of stuff, you hit the close button. In fact, I'm going to write that down so we're all really clear, and you know to do this. Okay, we say it in the room, but you notice that if we get into it, and it happens, it's pretty rare, but it does happen. When we get into a trade that's not going in our favor, what do? When you are in a trade that does not go in your favor within a reasonable period of time, you get out, hit the close button. Look, would you rather have, especially if you have, this is getting all jammed up here. Let me try to fix this. This is supposed to go like this. There, it's better. Please remember this. Please, 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 please. Because here's the thing. If you're going to get popped a couple of ticks or 1 or 2 ticks on a 1 lot or 2 lot or whatever, that's much better than having a full stop out on a 2 lot or more. Don't let it go all the way back up like that. Just don't let it happen. Okay? All right, now let's go back to our question at hand. We all know that these little bips through the top and bottoms of ranges, we're drawing we know that that's an area where the line is. It's not a specific point in place on the chart, although visually it is for us. There we can gauge where we're getting long and short, right? Here we clearly blew out through support. Now, what is the difference between this circle over here and what it did right here? Circle A, circle B. Are they the same or are they different? Circle A, circle B. What's different between these two circles? A, which was overnight in the European session, and here we're full-blown into the U.S. equity market, 7:30, or an hour into the U.S. equity market open. This one had follow through the downside. This was your short. So unlike this short, where you could have been under the belief that you wanted to short this, you boxed it. It went a little bit in your favor very quickly. Maybe you got a scalp, maybe you didn't, depending on where you got filled. You hit the close button, you got out. Maybe you made a couple shekels. Maybe you stopped out for a small loss. Whatever. No follow through here. Here is the complete opposite. You break support. You go even deeper than over here. And you come back up, you come back up, you come back up, just under. It can't even get back to here. Barely, can hardly even get back to here. It can't even get back to the midband. Now, is this a legitimate short trade in your opinion, yes or no? Right here. Either there or with a slightly larger box that would look more like this. Either one. Are those legitimate short trades, yes or no? These two boxes I just drew. Yes or no? Legitimate short trades. What say you, team? By the way, most of you know me. When I do these webinars, I don't just these aren't like, not saying asking all these questions to entertain myself and hear myself talk. I want to see everybody participate. That's how you learn. If you learn over the years, anybody, any kind of education you've been through, you know that when you participate, when you hear these questions and you're looking at the chart and then you're looking at your chart tomorrow, you're going to know what to do. Yes, these are legitimate short trades. Yes. Close above line 2, check mark 1. Close above stealth, check mark 2. Are you close to the midband? Yes. Good. Has the trend changed? Yes. Background is now red. Midband and all the bands are stair-stepping down. You are no longer in this range. You are looking to trade the short side on retracement. So yes, this is absolutely your first entry short. All right, I've spent a huge chunk of time on ES. Now let's go ahead and talk about what else we want to look at ranges. Let's type in some instruments that you like, and let's go look at what is going on with them. What do you like to trade, and what do we want to pull up here in the next 20 minutes? Go ahead, type in some instruments. We'll see if we can get them all covered if we can. We'll look at the difference between ranges and trends. All right, I see a lot of Russells, predominantly Russell. I see a couple of crudes. Okay, start with the Russell, and we'll work our way to crude. Go ahead and type in whatever you want to see. I think I got a Russell chart over here. Yeah, I do. All right. Okay. Here is the roosty bird. Roosty roost eye. Now I'm going to do an exercise with you where I'm going to move the Russell chart back and forth, back and forth. And I'm going to ask you, I'm going to give you 5 seconds on each one of these little evaluations you're going to do. And you're going to type in T for trend. You don't even have to say what direction the trend is, up or down. You don't even have to say that. It's either trending or range bound. So I'm going to flash something in front of you. You type in an R for range bound and T if you believe it's trending. We're going to do a handful of these on the Russell. Are you ready? Ready? Okay, here's the Russell. 5 seconds on the clock. T for trending, R for range bound. Here's the first one. This would have been the Russell between roughly 9:30 Pacific-ish over here, all the way till the close. Here's the close at 13.0. Well, actually, I think it runs through 1:15, but it's close enough. Was the Russell on the tail end of the morning range bound, R, or T trending? 3 seconds left. R range bound Russell, T trending. 2 seconds. Cast your vote. What say you, team, on the Russell? 1 second. Time's almost up. Cast your vote. All right, time's up. Range bound. Clearly, we can see that at 9:30 to 9:46, you could have very easily put a line at that swing right there. And obviously, you can see that there was a double bottom down here. Actually, at this point here, between here and here, you could have put the line. However, it's good to have a third point. Your third point was right here. When these swings get established, you don't, please, 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 a million times, please, go in here, get your horizontal line, boop, put it right there. When you see a swing down here, boop, put it there. Now, excuse me. What happened over here? So the time, the area of 10:28 to 12:06, is this area the same as this area over here from 9:30 to 10 o'clock? Is this area, which initially established the top and bottom of the ranges, or the range, the same as this? What's different? Is there anything different between this area here and this area over here? Well, we just did this exercise like 10 minutes ago, so you should know. Everybody should see that, right? The range got tighter, just like ES. Now, this happens a lot. You see a pattern forming here. So what happens is this, is that markets get into ranges, and then the ranges slightly alter a little bit. Sometimes they get bigger. Sometimes they get smaller. Sometimes they get extremely tight. Sometimes they blow out the top and bottom of them. There's all manner of different ways on how a range can manifest itself to you. Now, we clearly see that to the left, where the first support and resistance lines were drawn from, roughly 1350 support, all the way up here to 1750 is 40 ticks. So clearly, without question, this area over here was tradable, 40 ticks. Now, let's assess this area right here. We can see support was sitting right just above 15-ish, right? Right, more or less right in here. Right? You know, right in there. And you know, resistance was up here around 17, 70-ish, plus or minus a couple of ticks. So is this tradable on the Russell? Is this range tradable? Yes or no? 4 seconds left. Type in a Y or an N. You know the calculations. We've talked about them 1,000 times before. Everybody knows the calculations. What's the calculations? 15 support, 15 something, and 17, 1770 resistance. What's the value per tick? How many ticks in a point on Roosty? Time's almost up. Just type in a yes or no. There's no big analysis required here. Either yes or no. 28 ticks. Yes, 27 ticks roughly. It's right at the tail end. It's acceptable. Primary mode of entry, long or short? 4 seconds in L or in S. Are you buying support here, or are you shorting the top? That's your two choices. I'm not going to go both this time. 4 seconds. Long or short. This is how quick you have to do these assessments. You've got to practice, practice, practice if you want to make money in ranges. See them. Draw the lines. Put the buy and sell orders in. Put the lines on. Put the buy and sell orders in. Do it in sim over and over and over. Try different instruments. You can get really good at ranges. I know traders who hated ranges, despise ranges, lost money in ranges all day long. Come to practice, now they love ranges. They make a ton of money in ranges. Your primary mode of entry here is clearly long. The background is green. It's holding support. You come out of a little bit of a push up. You're buying. Every time she kissed support here, you're buying it, taking profits. Buying it, taking profits. Buying it, taking profits. Buying it. Here it blew through a little bit. Good. Let's continue on. Is this helping at all for seeing these ranges? That was the whole primary goal of this webinar, was to help you, first of all, see them, and then second of all, know what to do with them. I was hesitant, when I came up with this title last week. I was concerned that nobody would want to. First, didn't even want to come, and everybody showed up, so that's good. Got a very good turnout here tonight. This is helping? Yeah. So let me go back here. Yeah, so that's the last thing. It's really simple. Look, if and you can almost develop a feel for this when you start looking at more ranges, right? If the background is green, I know the mid band is sideways. Okay, I see that. But if the background is green and you have predominantly blue bars and you're holding a nice clean level of support, that's where you're getting in. You're buying those bounces, right? Buying the bounces, taking your profit, getting out, locking it down, buying the bounce, getting out, taking it out. Occasionally you could put 2 on, take profit at a fixed target, and maybe you get a runner. Like right here, you thought maybe this was going to take off, so you trail 1, you trail a stop on it. You can experiment with that. And then, it doesn't no follow through, you stop out. This isn't deep enough. You're in a range. It's got to go down here, right? Ron says that I've learned to find ranges. It's easy to see on chart, and I've seen them for years, but I have a hard time spotting them in real time. Okay, cool. Let's do an exercise together then. Is that true for anybody else? Like we're armchair quarterbacking it right now, sitting here all comfy in the chair at 5:48 on a nice Thursday evening, armchair quarterbacking. Hey, you're in a range. Everybody sees it now. What about in real time, Charles? That's pretty tough. How do you do it in real time? Anybody wondering that? Yes, Toby, Glenn, Bill. All right, well, let's do it. Let's do it. Let's do it. All right, here's what we're going to do. We're going to do some exercises, and we're going to pretend we're in real time together, and we're going to advance the chart. I'm going to go from periods of trend to periods of ranges, and we're going to pretend it's in real time. And when you think that the market has gone range bound, you type in an R. All right, this would be a similar exercise as you would do tomorrow, only looking at a real chart when the data's coming in. Tell me when you're ready. Ready? All right, here we go. Now remember, when you think you see a range starting to set up, okay, Greg, no problem. I've seen a lot of people have to take off here. I see a lot of people coming in and out. Don't worry about it. This is recorded. We'll get it on the web tomorrow morning. I've seen people come in late, people taking off early. Don't sweat it. No big deal. The whole thing's recorded. It'll be up on the web. You can watch the whole thing tomorrow. No problem. Okay, Greg. See you later. Remember, R. Type in an R when you believe that a market has gone into a range. Ready? Here we go. This was the Russell at 8:03 this morning. Ready? Here we go. Let me blow the bars up a little bit more so you can see them better. Okay, now we're at 8:10. There we go. $8.14, $8.15, $8.16, $8.22, $8.24, $8.27, $8.30, $8.36, $8.40, $8.45. All right, let me go back. And here I'll leave it right there. Now, I got to give some kudos where kudos are deserved. Some of you came in early on your range call, and some of you came in late. I won't name any names. The bottom line is that you all saw it. Now, when this happens tomorrow, here's what you need to do. Let me ask you this. What is the first point of support or resistance where you would put a line on the chart? The first point. Would it be here? A, B, or C? Here's your real-time data coming in. Okay. We know that the first part of the range identification is placing lines at swings. Right? We all know that. That was the first thing we talked about, right? So would the first point of a line go at location A, here, location B, here? This is the first point of where you put the first line. Or C, right here. 2 seconds left. Just type in a letter and make a guess. If you don't know, just make a guess. Time's up. It's A, right here. This is the first point. How do you know that? Well, what you want to do is when you're in a trend, so we're in a downtrend. Let me back up. Okay. We are in a downtrend, and so when the market is going up or down, it has higher lows and lower highs depending on whether the trend is up or down. In this case, the trend is down. So we have a series of lower highs and lower lows. Lower highs, lower lows, lower highs, lower lows. We hit this point right here. Now we come back up through line 2. We come up through the stealth, and we go almost to the midband. So when that point is laid down, you put a line right there, just like that. A is your... So here's the problem. I know what the problem is. And this is why this word was in the webinar title for a reason. And the first part of the webinar title was what? Oops, I can't even spell this darn thing. So the word quickly is really important here. And I would submit to you that this is probably the reason that a lot of you are struggling to see and trade ranges, is because you're missing the operative word of quickly. I would venture to say, and I would bet money, if I was a betting man, that you need to see a lot of points hitting the same place over and over again for you to be convinced it's a range. In that case, it might be you might need to see this swing, this swing, this swing, this swing, and maybe some more on down the road for you to put a line here and for you to put a line there. Is that safe to say? Is that a fair statement? I mean, be honest with yourself, be honest with the team. Do you need a lot of touch points? You know, you got to see this one. You got to see this one. This one has to form, and that one needs to form, and then you need a couple more, and you get all. The next thing you know, you're all the way over here. You're into it for 30, 60 minutes. Finally, you put some lines in there, and you say, "Hey, that's a range." A whole bunch of you typing in, "Yes, that's me." How do we fix this quickly problem? This is your problem right there. You see it, right? Everybody sees that's your problem. It's not the identifying the range part, because afterwards, when it's all the way over here, you see it. You're seeing that part. You're missing this part right here, this quickly word. How might we fix that? I mean, in terms of seeing a range and trading it, would you agree that the quickly part's pretty darn important? What do you think? Is the quickly part? And the whole identifying the range thing, is the quickly probably the most important part of it? Well, other than putting the lines in the right spot and all the rest of it, but the quickly part is the most important part. When you see a swing and you see that a market, I would submit to you that you would know as early as this circle right here that you could be in a range right there. This one and this one. And they came at 8:09 and 8:10 respectively. Within a minute or two, you could have quickly identified, okay, so say you missed that one. Here you are at 8:12. This is like within 2 to 3 minutes, these are established. Sure, it bipped up a little bit above it, and it kissed the midband. Is this a short trade? Just tell me. I'm going to do a whole bunch of them. You tell me yes or no. Is that a short trade? Yes or no? Legitimate? What do you think? Is that top of the range? Is that a short trade? Is this a short trade? Yes or no? How about this one? Is this a legitimate short trade? Does it meet the criteria? Yes or no? Are these short trades over here? Is this short trades? How about if you missed that? Is this a short trade over here? You see them now? Everybody sees them, right? Sure, the line would help. You know, maybe you didn't put the line in until here. Clearly you could have put the bottom line in by here, yes? I mean, no question about it. Everybody sees you could have put a line down here. That's pretty straightforward. Right support. No question about it. Maybe you waited until here, 8:13, 8:14, before you put that top line in. But then it kissed it, rolled, kissed it and rolled, broke a little bit, kissed it and roll, kiss it and roll. All legitimate short trades. You've got to get those lines in quick. Let's do another exercise. Some of you wanted to see crude. Let's get crude down here and do a couple of things on the crude before we run out of time. We're almost out of time. Let's get crude up here real quick. Pop quiz. 5-second pop quiz. You ready? Prepare. Crude oil. Trending, yes or no? And if so, what direction? 10 seconds on the clock. From about 9:30, 9:45, 10 a.m. Pacific time today into the close of the oil market, was it trending, yes or no? And if it was trending, is it up or down? Just type in a U or D. T for trend. T for trend meaning yes, it is trending. Up or down. 8 seconds on the clock. Trending, yes or no? You can type in a yes or no or a T to identify that it is trending, and then U for up, D for down. 6 seconds left. Take a look at the chart. What's oil doing here? Into the close. Into the close. 4 seconds. Time's almost up. 1 second. Time's up. Yes, you can clearly see that oil into the close was trending up. We broke support here. We broke resistance. Background turns green. We pull back. Higher highs, higher lows. All the bands and the mid bands, they're stepping up. Bars are predominantly blue. predictors are heading up. You are in an uptrend. You are buying support at support. Second part of the pop quiz, 5 seconds on the clock. Is that a legitimate long trade, yes or no? Just to wire it in. 4 seconds left. Bip, type it in. That's it. That's how it won't even take a second. Y, N. Cast your vote. 3 seconds. Is this box a legitimate long trade, yes or no? 2 seconds. Time's almost up. Cast your vote. Y, N. Time's up. Yes. Minimum criteria for entry on the long side. Close below stealth, check mark 1. Close below line 6, check mark 2. Bars closed, form a little box. And if you thought that this one was legit, you were correct. Well, that's right on the cusp. Right on the cusp, simply because this one just sort of pierces stealth just barely at the time it happened. This was no question legit. Good. Let's look at a crude range, and we're going to do a final exercise where you're going to, when you think you're going to put the lines on the range, you type in the letter L. When you think you can put the first line on a range, okay, I'm going to advance a chart, and when you think a range is setting up and you're going to put the first line down to identify the range, you type in L for line. Tell me when you're ready. Toby's ready. All right, here we go. I'm going to advance the crude chart, and when you think that the first swing is ready for you to put a line, you type in an L. We're going to do a couple more of these. I know I'm running over, don't worry. And this is really important we do these exercises. Okay, I'm going to start it. Don't type in an L yet because I have to advance the chart. When I advance the chart, you decide when the L of the first line comes. Here we go. All right, this would have been about 7:30 this morning on crude. I don't know what the heck these numbers are doing here. All right, I'm going to stop right there. Most of you got it. Okay, so here again, just to reiterate, what you do is at the end, if a market is going to go range bound, it is going to occur after a thrust move in a given direction. Here is the end of the thrust move right here. Some of you typed in an L as early as when this formed right here. I would call you kind of the early adopters. Many of you then typed in L after this happened and it started to bounce. So you got confirmation of support. As soon as you have confirmation of support and it's clear, you simply put a line here, yes? All right. Let's go back. Everybody sees the first line. Now you're going to type in L again, or type in L2 for where you think and I'll help you out. It's going to be a resistance line, right? So the bottom line in range is support. The top line in the range is resistance. We already have our bottom line. We saw it, right? Now you tell me when you think line 2 is ready to go in. Ready? Here we go. Okay, there's line 1. All right, I'm going to stop right there. Now, if you notice, this is a pattern that you really should try to work on, okay? Here's your thrust. Here's a retracement. Here's another push down to try to check support. Clearly, we're holding this. This is your support line. Up here, we have a similar pattern. We have a retracement in a thrust against the trend. Is that a short trade? Yes, of course it is. We pull down. Okay, this is the old ABC pattern, right? You see it all the time. Come back up. Tries to break this. If this was trend change, what would it do? It would go up this way in reverse, right? Did it do that? No. Where's line 2? Line's 2 right here. Line 2's right there. I would submit that you could get. Now, here's the thing. Okay, this is the one thing you got to work on, and going back to the word quickly. As these are forming, it's hard. I'll give you that it's hard to see them in real time. Where you get confirmation is on the pullback off of it. What am I talking about? Well, here you hit it and you pull back. So this is established. See the lines in here? See the dashes? Here you double check it. Doesn't break it. Now here's the pullback. On the pullback off of it is when you can see it. That's the earliest you can see it. Right? That makes sense? What I'm saying is, just to be clear, is when it first hits, until it bounces and shows the support level, you can't, when this is occurring in real time, it's really hard to see that. However, when it comes up and then it bips down again to check it, what are all these things doing here? When it pulls back off of support, it's at this point here that you would put the line in here. Everybody see that? Likewise, let's look at the blue bars that pop above the midband here. When it pops above the midband, gives a yellow-blue bar. As this is occurring in real time, it's really hard to see that that is the swing. What would be confirming that that is a swing? And you should look at putting a line up here. What would confirm it? Pulling back off of it, yes? Pulling back off of it. Where do you get that? You get that right here. So it's at this point where you pull back off of it, you put the line there. Everybody see that? Let's do that again. And that's why most of you are struggling. Some of you are seeing this, right? Some of you are seeing this. You're getting it. You understand what I'm saying here, right? This is why you're missing the swings in real time, is because it's not when it hits it in real time. Sure, you can look back and say, well, of course that's the swing. It's after it pulls back off of it. That's when it's identified. So here in real time, it hits support. It's hitting support, yes? But in real time, at 748.5, you didn't know that at the time. You see that, Toby? Everybody? He's saying, yes, I'm getting it. Good. Okay, cool. Now watch. Pulls back up. There's your pullback off support. Now, at this point here, you're thinking this might be one. And you could actually put a line here. There's nothing wrong with putting a line. Because here's the thing. If it flips up and rolls over and breaks the line, so what? You move the line or you get rid of the line. It's better to have a line early than late. That's, I guess, what I'm trying to say, right? We come up, we kiss, we challenge it again. And certainly by this pullback time here, by 7:59, as it's pulling back up here, it was clear that this was a support level and a line should go there. Okay? Once again, we come up to the top. We hit that swing. You could have put a line there as it formed. Most likely you would have waited till it pulled back because at this point here, at 8 o'clock, it was clear that that was now resistance. Now you have your range. You know, that was all within a span of about, 8, 10, 11 minutes. Now, of course, if it breaks it down, the downtrend continues. If it breaks it up and reverses and an uptrend continues, you take the lines off, you trade accordingly. The key is to spot these as quickly as possible and don't hesitate to throw some lines on there. All right, I'm going to go ahead and stop there. Any final questions before we wrap?